Yes, welcome. This is it, NFP day. A beautiful day for you true scalpers. It's the Mohawk Forex team bringing you live true scalping on the 3-minute time frame. Some people use the 9-minute now and the 15. We stick on the 3-minute for our YouTube channel and my favorite kind of time frame. We'll be looking at scalping gold and the US 30. And all the early reports are suggesting a figure of about 450k, but to honest with you, the market doesn't have a clue. They're ranging between 250 on the low side and 750 on the upside, which means volatility for us and uncertainty, which means there's going to be some big spikes, big moves on gold, which will go the opposite to the news direction, and US 30, which tends to go with the actual news release, and then we'll flip it for the actual New York Open. So chance to get some multiple trades in, no pending orders. We live scalp, we go in, we get out, we wait for that initial release, we wait for the initial move, we scalp backwards on it, we scalp up on it. You'll see it all doing live, and this is how you get in and out, make some money, and before anyone's even done a trade for the day, the rest of the market, we've already done our profit. We love it. We love trading the news and the fundamentals. It's what I teach in my group, in the VIP group, and if you want to know how to join the group, just go to the website www.mohawkforex.com or look in the description of the YouTube channel below and look at how to join our VIP Discord channel, where I will teach you how to trade fundamentals as well as TA on news events. So yeah, just checking in with Bloomberg and watching, keeping on what they're saying. Again, they haven't really got a clue what's going to be happening with this figure. The markets have obviously been on a massive big bullish run, highs on SP, on the Dow, the DAX, the NAS. Gold is obviously, as you can see on my chart, taking a dip from the kind of London Open. In terms of TA, the markets are positioned for the news to be worse than expected, so we get some nice drops on all the equities and indexes, and we get a nice buy on gold. That's in a perfect scenario. I'm not suggesting you jump in and do that. Just how the TA is looking, that would be a better move for us, is that we get a figure of about 250, 300. We could take some buys on gold and we could take some sells on any indexes, mostly US 30, but obviously it doesn't always work out like that, and we have to wait for that initial spike, and depending on how quickly news result comes out, depends how quickly we get in on the trade. If we already miss and we see things taking off, obviously you don't get in. We wait for the pullback, we wait for the wick to be exposed, and then we get in and go the direction off it. So again, you practice this, we practice on demo, practice how to do this, and see you do it live. And what I do is I tend to just create a separate account just for this news event, so therefore if it does go wrong, which you can do, I don't blow my entire account. I just have a set amount of money that I put on the side that I just trade NFP on, scalp it as many times as I can in that first kind of 15 minutes, then relax, watch the market, and then go back in again on the New York Open. That's the plan anyway. It's what we've been doing for the last few years. Nothing's really changed. We just keep hacking away at it and getting as many wins as we can, you know, that kind of goal. So get my coffee. And like I say, we're looking at gold at the moment on the 3-minute time frame. As you can see here, we set up for a what would be nice buy up to our breakout zone here, which would be a nice spike off around about 200 points, which is great. That would be my initial EP if the news is worse than expected, and obviously if it's better than expected, we're going to come down to our outer breakout zone here. We're about even steam, we're trapped nice in the zone. I'm not going to put any lines on the chart yet because I've still got 20 minutes to go. So we're checking on US 30, and obviously that's the opposite, which is what we like to see. I'd like to see this go the opposite, obviously. See, we had a nice bull run. The market is really... Some of this is the Bank of England not introducing higher interest rates yesterday, which is kind of contradictory to what they were kind of saying. and what they were planning to do, but they're holding off, so that's kind of good news at the moment. But obviously that spurred the markets into some boost. UK 100 FTSE, US 30 DAX, all kind of, and then like I say, back this up with kind of the expectation of the NFP. This is where we got the run. And if we were trading this today, there could have been multiple entry points here for trades 1, 2, 3 here, 4, 5, 6, 7 trades. You could have had a for about 50 to 100 points per trade. So on here, you know, I'm expecting a little bit of pullback. It's coming to our zone here, look, our breakout zone. Top, bottoms broken out. We're going to have a retest of this, or if the news is bad, or breaks down into full zone, and if the NFP comes out good, then obviously take a buy resistance zone, and the spike will probably just above it. Very we're bothered about getting in and getting out, and then getting in and getting out again. You know, kind of multiple trades is how I try and do it. I'd never set pending orders on this because that's how you do blow accounts, and that's why people steer away from it. Got to go into this live. You've got to take that risk and you know, get the direction, get in, get out. And sometimes you take a few little losses because it can be your broker. The spreads obviously increase as well, but I never get worried about the spreads. People go on about the spreads. The movement in it is far more than the spreads ever will be. So as long as you get the direction right, your spreads will be covered. You know, everyone wants to make money from NFP, including the brokers, the big banks, everything. So this is why spreads are there. And it shouldn't stop you trading as long as you know the move is going to cover a spread, and it usually does. Never lost because of the spread yet, put it that way. So just listening to just in the background, keeping an eye on the basic fundamental day or can affect. So we're going to stick with gold initially. You know, I'd love the figure to be worse than expected so that we do get a nice buy. And obviously we can nip it on US 30 because US 30 it doesn't spike as quick. It's a little bit slower to react. And then we can, if we miss US 30 and just stick with gold, that's fine because we can go for both of these once the New York opens in 90 minutes. So let's look at the economic calendar. Obviously I use my FX book. You can see here the general prediction is a figure of 450. It hasn't been accurate for the past 6-7 months, so I'd be very surprised if it's anywhere near this. It's either going to be way better, 6-7, or we're going to be 250, just a bit better than last month, but lower than expected will cause buy on gold and sell off equity market. Again, can always go opposite, and you've got to know when to close the trades. Yeah, that's something I teach in my group. I don't discuss that really on the YouTube channel because I'm just here to show you how to get in and out. You know, everyone has their own risk. Each individual work out. Coffee's going down well. Got 15 minutes to go. Everything's set. And it's been a good week. We had some good trades overnight on the in the Asian market as well, which was really good. Got some wins on the HK50, the China, the Nikkei 225. We didn't trade the Aussie, but we did trade the NZD USD, and we got about $200 on a couple of little cheeky buys on that as well. So again, that's all using our Axe trading system, RSI, which you get access to once you join Discord group system here with our grid system for scalping. Various indicators. Again, this is just one system within a dozen or so systems that are built into the actual Axe that you can select and tweak and do whatever you want. This is just the style that I put together this, and this is how I like to scalp. But it just means you only have to use 3 indicators, so you can use just the 3 plan on trading. You don't have to be a VIP member, you can just join our group and use free trading view, which is a good advantage, kind of what we wanted to do. So we've got 14 minutes to go, as you can see here. And you know, you're usually going to miss that initial spike. The market's jumping, you know, there's always a time lag, a delay, there's always people who know. You can't second guess this. You can't start going, well, look, it's going to be a buy, it's going to be a sell. I've tried that so many times in the past, trying to be clever. You've got to wait. And if you miss that initial spike, don't panic. Wait for the true retracement, then get in. As long as you go in the direction News is telling you, old reverse, then you have a good win rate, chance of a win rate. So our first 15 minutes, first 4 or 5 candles on a 3-minute time frame that I like to try and scalp. First one, you know, could shoot way up here, depending on the result, will come way down here, the whole market will shift. You know, we're just looking at getting there 100 points per trade, you know, and just getting the green on the screen, really. You know, can't start doing all this 3-1 on risk to reward, 4-1. This is where you try and strategize it and analyze it too much. You can't do that with NFP. It's a real volatile, organic, you just really don't know. We've got a grid system here where obviously areas of resistance and support are, but we know they get blown away by NFP when the result is so severe. It's just to give you an edge. So I wouldn't set a pending order saying, right, it's going to hit here. Probably will do. But if the news is good, then it's never going to come nowhere near here. It can probably just shoot straight down, or it can spike crazily both ways. We've seen it all. You just stick in the wrong direction, go for it. You know, so as simple as. And it's just practice. A lot of traders keep away from it, avoid trading there. To me, this is where you want the market to move quick. You want to get your money in and out quick. We all do. This is the whole thing of trading. What frustrates so many traders, because waiting to hit profit, or never hitting profit, waiting for the entry point. So why would you avoid events where you can get in and out in 10 seconds, 20 seconds, make the money you need, one about your day? That's why I love trading market opens, news, and NFP particularly. Not one for waiting around. Yes, you've got to fine-tune your strategy. You have a system. You've got to be prepared to take some losses, but get this right, and you could be done, like I say, before most people have even switched on their computer to start day trading. And I've been doing this for three years plus now, 4 years. You know, the kind of scalping, and I'm just trying to fine-tune it. Taking in the news and the fundamentals is crucial.
Adam Posen there of the Peterson Institute, the president. The payrolls report joining us in about 12 minutes time, coming through. It joins us, same thing. Equity futures up 11 on the S&P 500. I always love this week, Tom. It is the best week of the month for me, the best, the best single day of the month, when we put together some of the best guests on the street to comment on what's going on around the world in the economy and the market, and on central bank policy.
Hello.
The importance of this report, John, the divisions that we're hearing about 2022, I believe I've never seen this.
I haven't seen the outlooks yet, Tom. The official outlooks. They'll start to pour out in the next few weeks. I'm looking forward to that.
I'm looking for Michael.
Hello.
We'll get to that here in a moment. Right now, if you believe in granular economics, this is the most important conversation of the morning. James Glassman has decades out of...
You hear me? You hear me?
Yeah. I can hear you. Yeah, loud and clear. Yeah, all good.
My mic was working.
Yeah, no, it's fine. It's coming through. Yeah, perfect. You're live. All good. Just turn down Bluebirds. Keep an eye on that general news. Just want to see what their reaction is to this as well. You can see gold is nicely ranging now. Look, spiking around, getting ready, like a spring coil. That's what I like to see with NFP. You see, woof, you know. US 30 still looking bullish. I mean, like I say, the equities are still anticipating a good result, so this could be smash heavy resistance here and go up into the stratosphere. past the extension before falling back, because obviously I expect a correction. Been a nice tasty bull run since London Open. Nothing goes straight up forever, we know that. So you've got a trend line break here. Look, where prices come back, retested our baseline and gone up. Again, kind of all these technicals all fall out the window of NFP. Anything is possible. You know, we just use the TA to say, look, this would be nice if the news was worse than expected, because then we'll get a nice second leg M. Look at the double topped out, and we get a nice, you know, drop all the way possibly back to our neutral support zone. So in terms of TA, we want it to be worse than expected, but we can't just assume the market's going to give us that. And the reverse would be for gold then. You know, gold would be a nice buy right up to our, look at our flat AG line. I mean, I've got some lines in now, look, just potentially. Oh, look here, the perfect two potential EPs if it's worse than expected news. You know, these will be smashed before we even get a chance to probably enter the trade, and then we'll catch the push back up again, you know, and we'll catch when it tops out at a heavy resistance zone. Say it gets to here, this minor resistance, then we can look to take a sell depending on what the RSI is doing, you know. So double, look at that, beautiful, you see, double top it out. Want it to be worse than expected. Get that nice sell off. You know, but you just don't know. So much manipulation around NFP, so much, you know, people don't know. No, nobody should know anyway, you know.
Exactly to a question that Jim Bianco of Bianco Research just sent in, where he was saying, are we talking about this all wrong? We are seeing a
about 7-8 minutes to go. Make sure broker is fine. Yep, good. Firing up 30 and gold. Okay, we'll get in on gold initially and then see what's happening with US 30. But with NFP, until you practiced it, you're better off just sticking with one thing. It'll be GJ, USD CAD, GU. I mean, there's so many things that move because of it. Just pick the one that you like the look of, that you can trade, and you've got the account size to cover. That's as simple as. Don't try and look for multiple things, just stick with the one. Me, you know, I don't usually do a lot of gold on news events, but this one I do like gold because it really does spike either way. And sometimes even if you get the direction wrong, you'll end up taking a win, getting in and going the opposite way. You know, it gives you a chance to recover that first 3-minute candle. There's plenty of opportunities, as you'll see. And obviously, again, you've got to be hitting that broker button, because again, the brokers love delays, lags and everything. They don't want you trading this, because obviously you can win and lose, you know, short space of time. So you've got to have a good broker with a quick execution. And if you get it wrong, get out of the trade, take the hit. Be like I say, I just risk one lump sum in one separate account. So if it all goes wrong, I don't blow a main account up. That's the sensible thing to do when trading major. Lot sizes, I'm just using what I use normally. I don't go Lambo. Again, I just rather keep with my normal sizes and just do multiple trades. Yeah, you can go big Lambo if you want, but then if you do get it wrong, you're screwed. At least if you stick with your normal lot sizes, risk management, then if you do get 3 or 4 that go wrong, you might get 3 or 4 that go right. You at least come out of the trades break even. So, you know, I don't believe in that kind of increase in lot sizes just because there's a chance of, you know, you might be a millionaire in 30 seconds. But, you know, stick with your plan like you would do trading open news. Just increase the amount of executions, because like I say, I'm probably going to click loads and probably only get half of my trades entered into. So you have to be aware of that, and again, that can scare some people. Just got to be, go for it, you know. UK 100 is now selling offers now. Pretty good. I did have a couple of sales on UK 1. Yeah. That took me into a bit of drawdown, about $200 a drawdown. That's all come back now to kind of break even. So it's just starting to dip, because again, these bull runs, you know, on indices, They do go on for a while, but they usually will have a transition period into the next kind of session, and you'll get some kind of correction. Again, yes, I mean the UK 100 FTSE might well move FP as well as it used. That could be nice. Could be some bonus little trades down some.
About 1.9%, we've gone up a little bit, I think, and I haven't looked at the real number in a bit. But we basically are not keeping up with inflation. Now, people are making a big deal out of that, but it's only been a month or two. It's like
you need more data.
You need more data.
He sounds like he's with the Fed, John. I think he sounds like he sounds like he's with the Fed.
It also depends on what you're buying. You know, if you're buying services, the inflation rate is not so bad. If you're buying goods, good luck.
You know what's coming in 5 minutes? On the one hand, this. On the other hand, at the other end of the payrolls report. Looking forward to it, Mike. 5 minutes away, your payrolls report just around the corner. Yeah. The October jobs report setting the tone for this market, at least through the early part of today's session. Your equity market up 12 points, Tom, advancing a quarter of 1%.
Is indeed.
The 2-year yield.
Yeah.
I mean, it's stunning.
Round trip.
152.64 on 10s. Tom, I never know when you finish.
Keep this on.
Your payrolls report. Can I build it
background? So
keep
it. I know it's a bit of a lag with the stream. Anyway, we're building up again. You know, everything's where it should be. Look, you know, kind of gold would be nice to take that direction. Got a nice trend line form as well. Look, perfect. So again, better than expected. Sorry, worse than expected. We're going up on gold, and vice versa on US 30. I'm going to put some arrows in there. I'm not saying we're going to be selling, because it could be continuation buys up to here. Look, we're going to be looking at. That's a nice 200 points to get out on. You know, usually I watch the grid system, and as the candles hit it, I'll just close the trade. You know what I mean? I won't. You know, this to me is these just levels to take profits on. So yeah, it could go up 1,000 points. It probably will do, but I will go in on multiple trades. I've got some in the bank rather than waiting for that one big trade or waiting for the one big move that might not happen, or you might get out of it late. Might not better get out of it because you're a broker. So many different things can play against you on this. So you know, I'm just going to stick on gold. Look, gold's already pushing down a little bit. Like I say, if it is better than expected, I expect gold to come down and, you know, breakout zone level. And that should be another 100 points. 150, that's fine, you know. We're looking to be millionaires. We're looking to scalp this as safely as we can and make some money from it. You know what I mean? These people who want to, you know, I know some people try and make a month's salary on NFP. Probably you can if you've got a, you know, $100,000 trading account or whatever, and you want to risk Lambos, but you risk also losing a month's salary. So, you know, here we go. Get ready. Gold's already moving. 40 seconds. Good luck, everybody. Gold's already in action. Look at this. I love it. Look at that anticipation. Does that mean it's going to go down? Is it manipulation? Buy at the bottom. Buy at the bottom, remember. Here we go, everybody. Good luck. Let's see you on the other side. Get in there. See what we can get. 20 seconds. 20 seconds. Ooh, I love it. I love it. I love it. Click, click, clickety click. Come on, broker. Deliver the goods. And we're going to see 250. We're going to see 700. Unexpected. Say, don't worry if you miss out on that move, doesn't matter. So it's better than expected. Better than expected. 531. So let's get in there. We're getting in there. It's beautiful, beautiful. Beautiful, beautiful.
Well, look, it's a war for talent. It has been, you know, in other cycles before. It is now. We're finding that we're competitive.
Watch gold. That dip on gold, beautiful.
Mercedes-Benz is on a path towards CO2
and in US 30.
So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We're in. Look at that. Let this play out. Gold now. 1, 2, 3. Come on. About $1,000. Yes, $1,000. Done. Beautiful on gold. Let's have a look. And we're going to get out $50 up on US 30. Perfect. Let's have a quick look at US 30. Look at that spike. Beautiful. I mean, you see, it went against the TA, but we got in there. And watch this push up. Look at this. NFP. Let's watch that push. Again, you're going to get multiple requests here. Look, none of these orders are being filled at the moment, which is totally fine. Finally got one filled. Two filled. Again, I'm just going to get some green and get out on this. Watch this drop. Beautiful. That was a beautiful NFP. Let me just print everything that I got on there. So I only got the one cheeky buy. I got. So we got, what do we get? We got 200, 200, 400, 500. Oh, it wasn't about, it was about $600-700.
American is at 7.9, that's no change. Asian 4.2, no change. Hispanic or Latino goes down to 5.9 from 6.3, so a big move there. So those are the immediate moves.
So sell on gold and buy on US 30. Easy money. Plenty of time because the result came out. Now look at it push. Now look at it push. We've got some buys. Let's take these off the table now.
60,000 for manufacturing.
So
some significant hiring in those.
Look at US 30 push.
Generally higher paid.
Yeah, we'll get another 20, 40 and 30 and we're out there. We've got 3 buys on US 30 there. Again, all you got to do is wait for the spike to retrace. This is easy. No messing around. There we go. I'm posting all my results in the groups everyone can see.
In food services and drinking places. And the one other one I want to check, guys.
Look at that. There's your re-entry. Look at it fly. Look at it fly. Perfect.
And seasonally adjusting with education, and we do see some weird numbers there. The state government education down by 21.5.
Want to try and get 1,000. If we can get to 1,000, we're done. So wait. What we're going to do is wait for the resistance and get in on the pullback here. So quickly get to US 30.
And the fact that we are not seeing huge numbers of people being added back in, they may have already.
Let's see.
Or
can get
probably more like a difficult comparison.
Kind of. Yeah, I'm still waiting for UK 100 as well. It was a shame. Like, get to it for me to trigger a trade on that. These are good levels up. We're at a resistance level on our grid system. Let's leave them running while we look at gold. Look at that. Beautiful. I mean, you couldn't get any better. Smashed our TPs. Hit our support zones. Look. The gold here. Beautiful. This is what NFP is all about. Why the hell would you not want to get in on trading this when you get the direction right?
And understanding what it means for the Federal Reserve. Right now, I'd be looking at that participation rate, sitting here and thinking, okay, the numbers are great, good. And at the same time, there's nothing really here, at least listening to Chairman Powell, that's going to bring him in anytime soon. A participation rate, Tom, that we still need to see some positive work.
John, they're going to see more.
This is nice. This is nice, 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 nice. Right. So gold, let's have a look. What's gold doing? It's pulling up. It's on neutral support, so you want to wait.
The last 2 months with the revision, we've got 843,000 all in, and the delta off last month.
Like I say, now your brokers are playing ball. You see now, this is a good thing. Now brokers are back in.
John, I'm going to say with the revision, this is
to get that little bit where the brokers won't play ball with for a certain period of time. So
2 minutes after the numbers drop, things can change. 4 minutes.
Let's just see if we can get a few more waiting here.
And there's a very, very pro-risk feel to what's happening here. We had a really strong
Bloomberg in the background.
got a really strong payrolls report.
And obviously, like I say, what we'll do, we'll look at going kind of the opposite way on the open.
Make you think that the Fed chair changes his mind anytime soon, because we've got so
This has been
much more
great.
work to do on the employment to population ratio.
So they're not, we've got 52, 52.
Right now, the Russell to small caps up 1%.
Yeah.
The S&P up a third of 1%, all-time highs. Whatever we think about it doesn't matter. There are people in this market that look at the data's good,
Got that.
the reaction function, and it's not enough to bring him in anytime soon.
It will take many months of this type of report in order to move the needle on that. That seems to be the consensus. I will just point out what you mentioned, John. The labor force participation rate is really a huge glaring question mark in this report.
Managed to get
It did not rise despite the
1, 2, 3, 4, 5, 6, 7, 8, 9 trades at the moment. 9 trades on it.
Especially since the wage gains were pretty much in line with what was expected.
Well, Mike, give us a word on
Right,
that.
and like I say, don't be too greedy. We hit our TP there. We got 38, 42, 33, 33, 170, 200, 100, 35, and a little 6 that came from. But that's great. Now look at this. Look at it push in the opposite direction. Perfect. This is what you've been waiting for.
September. Remember that September number was 194, and everybody thought it was so terrible. It actually now prints at 312. And
Beautiful. Look at this.
pretty darn good. So we're looking at 235.
Wait for this to hit.
People on the payrolls, and that
Go.
what may happen is people look at this and
Heavy
say,
resistance.
okay,
We know what we're going to do when this gets up here.
It looks like what we're starting to get is people who lost their benefits are going back. But you're right, the labor force only rose by 104,000. The reason unemployment dropped, though, is because...
See if this is going to pull down. Wait for the RSI to creep
household survey and
go to that heavy resistance zone.
So this is a classic case of this is exactly why it's good news that
I want
unemployment...
to get a few more.
This is so
Get a few more in on
The
here.
heat of the grim 10% unemployment. Forget about the pandemic. 10 years ago, whatever. You look at the median duration of unemployment. Is
Any
sort of
green
that
will do
doom
on this.
gloom
These are all
statistic.
bonus little trades now.
It plunged this month to 12 weeks, somewhat back to the normal 9 weeks. That's amazing.
Yeah,
9 months, excuse me.
People are falling off of the
Perfect.
unemployment rolls, not getting the benefits anymore. So they're going out and looking, and as John pointed out very early on, there are a lot of jobs out there. So if you want a job, you
On
can get
those,
one.
let's
That's
wait.
just why we're
John,
seeing
look
this.
at small caps. They've moved 1% to up 1.3%. And the
West
Times
States
and
pulled
Jeff
back.
Rosenberg dispels
Bit there, look.
systematic.
There's a lift
Take
in this
some
equity market,
that
Tom. We'll be talking about
table.
47.
I'll do 33.
Before the end of this carries on at this rate. I like to give people
Hold as
credit.
well.
Producer Veronica
Another
reaching out
4
to me.
trades.
Vinco came in with an estimate of 530. Least of the number 531.
Very cool.
Well,
Credit where it's due.
some people
Tiffany Wilding.
getting it right. I do wonder.
Gold
though,
as well.
about
Look at this. Yes,
participation
shoot up.
rate.
Now, you know what's going to happen. You know, this is your manipulation. Here's your movement for the news. Here's your manipulation. Gold's going to come back down.
Say at this point, if we had a much bigger jump in the labor
Waiting
force,
now. Again, I'm using the same. I'm not using any Lambo lots. I'm just
has something to do with the fact that people
brilliant. There was another
we're getting the
$100.
same amount of people who are
We get
looking
there. We've
for
got 54. We've got 9. We've got 29, and we've
so
got
that
28,
push
and we've
down
got
on
32.
this
So
is not raising the
another
participation rate. This
group
may
of
draw more
trades that we just
people
got there.
into the labor market into looking for jobs because
Just
it's
print
obvious
those
they
off
can
so
get them.
see.
Obviously, the person who's going to be most happy about this today has got to be Joe Biden.
And Mike, on Joe Biden, on the president, wages have gone up higher faster than inflation. Do you see that in the data?
You do see it in the data. We were up 0.4 on an hourly basis during the month of October, which pushes the year-over-year rate up 0.3 to 4.9%. That should be good news. That's something that the White House
Great for that. I mean, the manipulation is perfect. Look at this. Now we're going to hit a heavy resistance zone. Move this round.
There is a bit of a shift between labor and capital at this point.
Mike, I've got
as
CPI
people
with a
get more
5
money.
handle. Don't you have CPI with a 5 handle?
Right, but
now.
Is this?
You see how easy this is to trade? You just catch this, get in, get out, then wait for the market manipulation, and then wait for this to pull back down again. So I'm going to take a
But they don't have to keep raising them. You know,
It's
this
on
is
to
one
Instagram account as well.
and you're making more money at Amazon.
Like I say, surely it's got to be the easiest $1,000 you can make in basically 15 minutes. Get this right.
Mike McKee, great work, buddy, as always.
Stunning.
Upside surprise, Tom, 531,000. Tidy revisions in the mix as well. A lot to talk about.
Yeah, I'm going to call it an 800,000 statistic, and congratulations again to the
And that's kind of my goal.
600,000 crew when you make the 1 month.
$500 and above. This is just bonus trading. This is simple scalping, true scalping. You know.
At the firm BlackRock. Jeff Rosenberg, we see an equity
See
market up. It is a
what's
meltdown.
Bloomberg saying?
Does anything in equities, but Jeff Rosenberg, let's go to bonds right now. How do you
Everything
predict
pushing up on news.
coupon or total return
See.
given the swirl that we're in right now between equities and the economic unknowns?
Here's gold. Look, here you go. Look, I tell you, RSI's only just poked out.
Yeah, it's a
Good opportunity. When it does this, it's great. It's a golden opportunity to try and get back in. So, waiting.
Tremendous uncertainty around central banks and central bank
It's 30. I'm waiting for this retracement as well.
You know, when you look at the
Told you, heavy resistance zone. Look.
Today, in the context of that global experience over the past week, it's
We get the dip.
remarkably muted. It's a world of surprises, and yes, this report today is a little bit of an upside surprise, but not really that much. And if you rewind to Wednesday when we were on talking about the FOMC, again, not a huge amount of surprise. So
I'm not got any positions open at the moment. We've
globally, I think the US
closed out everything. So, like I said, we've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. 13 trades in 12 minutes. And all winners. So I will post this in the group actually.
You know, it's one data point
Everyone
isn't going to
can see.
change that. And I think you see that in the market reaction. A modest increase in kind of the Fed-sensitive parts of the curve, but not really that much going on.
We welcome all of you on Bloomberg Radio, Bloomberg Television, across this nation on a bang-up jobs report. John Farrell, the real yield, negative 1.05%. That is stunning.
Look out for the show at 1 p.m. Eastern Time on Bloomberg TV. We haven't promoted it all morning.
Like a professional.
Look out for the other show at the top of the hour in about 20 minutes' time.
There's a second show.
Here's the lineup, Tom. It's not
Okay.
bad. It's not bad. Mohammed Al-Arian, Bloomberg Opinion, Anastasia Amoroso of Buy Capital
Jets
Network,
football.
Rick Reeder of BlackRock,
Yeah.
Michael Collins of PG and Feast Income. How do you know all the teams they support?
You know, what's important here, John, is
So, all you got to do now is use the RSI. Use our RSI scanner. Look at this. See.
the quarterback for the New York
This pull out.
is an
And then you might get a re-entry for a buy.
Get a question.
We're going to get this dip first.
Hammered at the end.
Michael
All right?
White, Western Kentucky. This kid was discovered.
Right, see where we're at.
I sense that there'll be some people out there that want questions about the payrolls report, the Fed of the market, but I'll squeeze that in.
Okay, squeeze that
on
in
the
at the
back
top
end.
with Dr.
Thank
O'Leary.
you. You have a good weekend,
John
TK.
Farrell, have a good time in makeup. Thrilled that you're here with us. Jeff Rosenberg, we're back with Black.
Gold, look, there you go. Look, see, there's your manipulation. Here's your pullback again.
Total return. We are at
I anticipate it coming back down here. Let's see. Post that so you can see, watch the RSI.
Portfolio to get the courage out to when the Fed somewhere out there far away gets restrictive. How do you actually do what you do?
Yeah, you know what you're
First 15 minutes, got 2 minutes to go. You say, here you go, pushing down. Let's just see if we grab anything. Because we reject off this little bit here of the support line. It already hit TPs both away. RSI just want to cross this neutral zone and our average line.
Global policy response to COVID, zero and negative interest
So we could be in on here.
really challenging environment because you're starting
Just market manipulation, going the way of the news, against the news, then back with the trend. And of course, look at the trend. The trend was already going to the downside anyway. And a continuation back down to 1786 level. I want to see it there. 1786 would be great. It could just range around a little bit now, ready for the open. But when the open comes, obviously, I'm going to look at taking, depending on where this position, take some more sales.
But it really is a recognition that it's a much more challenging environment.
US 30, ranging around, look,
we're
waiting for the dip. The dip yet.
Can play alternatives to traditional fixed income, while the
The
Fed
news was better than expected, so there was your NFP.
that's kind of fairly compensating.
But like I say, we had the TA, and the TA was telling us, you know, the TA looking at the charts, it would have been ideal for a sell on US 30 and a buy on gold. As I said, that's how it was set up, and the market doesn't always play ball that way. That's why you, again, pending orders based on the TA, you would have been blown out. Stop losses hit. You know, the release came out pretty quick. That's pretty good this time. My FX book. I know sometimes it can be a bit slow, but they came out and printed pretty well. And a 531 plus 81. That's pretty good to move markets. You know, the equities up and gold obviously down, and then you'll get the manipulation, the retracement, and then you'll get it further going the same way. On the open. Again, with some manipulation chucked in, there's always, because the markets know that people, the majority are going to go with the news or anti with gold. Of course, there's always going to be those spikes, liquidity grabs, stop loss hunting, whatever you want to call it. So you know they're coming, so don't panic. You know they're going to come, but you've got to trust the analysis that eventually the market will go the way that it should go. So don't be scared by seeing that, because that's what happens. That's the markets, you know.
I was reading a George Saravello's note. He was pointing
We're
out
on
that you've
resistance
got two
level
sides
here.
of the equation here. You either have the savings rate being so high.
Okay, just time to watch now. Just time to watch. Gold's going to break this support. Great, and then we can head on down to, get down to this.
That we are heading back to something of
Neutral
a lower
support,
growth
817.
environment that is not what we are observing now. Which, in your opinion, is more likely, and how does it affect your view?
Well, I think those are two somewhat separate issues affecting that negative real interest rate, right? So that demand story is
Let's just see DAX look, see how that was affected by it. See, pretty much did the same as US 30. Here was the release look, NFP, good result, German stock market, equities rise as well. So this is how they're all linked. This is what I'm saying. You can pick different things to trade. UK 100.
It's a little bit about secular stagnation and the lack of demand.
It's 12.27. Look, here you go. Look, news was good. Bang. Don't get a crazy move, but look, it goes up, and you could scalp that for a win. There's your entry point. Here's where the news came out. Look, your bottom of that candle, right on support. In terms of TA, the UK FTSE, this was a perfect setup. News was better than expected, and up it went, look, and it went up, and you could have grabbed, I'd gone for 100 points, you could have got 140 plus the spread. So 100, that would get you probably about $100. So, yeah, you can trade all these other things, you don't just have to trade the obvious. Just go back test, look how NFP has affected that particular thing you want to trade. You can look at something like oil. Does it move oil? I mean, you know. There's your answer. But again, look, yeah, news came out, oil went up. You know, is it coincidence, or is it just, you know, that's what NFP does, affects all the markets. So you could have gone in for a buy there, you know.
Is with BlackRock. Right now, this is a joy. We're going to get to Ira Jersey, who's inflammatory on yield dynamics right now.
US 30, like I say, I'm just waiting for some kind of pullback level here.
Cameron, you call it a comfortable beat, and you have a
and we'll probably get in for a sell. But just don't jump in. Don't assume, you know, because this could break, heavy resistance, extension, carry on up. You don't want to be putting sells in yet. Wait. All the indications, look for price action, look at the candles, look at the RSI, you know, look at the run, and just sit on your hands. Wait, you just made a load of money scalping this. You're waiting for this.
There has been something of a sea change in the in the market dynamic when it comes to central bank pricing, some of which has been a function of duress. People getting stopped out of positions in things like short sterling or Euribor or even Euro.
Not a pullback, so that we can buy again on the open in about 40 minutes time. You know, that's the way it works.
Like the past, and that maybe this cycle isn't going to be like the last cycle.
But that was good. That was a good NFP. You know, hope some of the guys in the group got some trades as well off on that, because that was a fairly good one. The result came out quick. The direction was firm and positive. You know, gold was 100% a sell, as you can see, and US 30 was 100% buy. So it was easy. It was easy NFP to trade when you get that result. Such a big difference.
Sort of an abattoir or a slaughterhouse.
Employment rate look was also thrown into the mix as well as slightly better. So it kind of all adds up.
And people getting stopped out of
That's a great fundamental week trading wise. We're just waiting to see if we can grab a few sells on this. Might be able to grab a few more sells on gold yet for a buy. Like I say, if it ranges around here, then it's gonna sell off on the open. So again, not too worried. Same as this. This will break if it stays here for the open, and we'll get a TP level.
Cameron, you've been on the trading floor for many years. And you speak with a lot
Back
of
up to here. It's already hit it once.
Is there a different
Chances, and as you can see, look, the line's just disappeared. So it looks like it is going to be a continuation of a buy. 200 points.
Well, I mean, I'm old enough that I can remember a time when they didn't have the machines beating you. So, I mean, that's been the...
and again, it's going to be a buy on the open. That's what I'm looking for, but I wanted it just to retrace a little bit before then.
Over the span of sort of the last decade or the dozen years, the machines are always going to
You always get. You just wait, hold, just watch. This is a good thing about NFP. You get to watch.
And this is basically my question. How do you respond to numbers?
And the fact it was a continuation of that bull run, look, right from here, from London Open, look. Could have had, like I say, 7, 8, 9, 10 trades on US 30 alone.
Through the numbers to determine what the bleed through.
We know where it can go to, we know where it can pull back to, what pattern we're looking for. It's sitting tight. Now let's look at gold. Gold's pushing down, look, which is what we wanted. It's got a support zone here at 17.89. Be nice if it gets to 17.88, such as some of these wicks did on the initial news release. RSI crosses the 40.38 level, look.
The machines have already done that trade. So then you've
we'll just wait. Could just play around for a bit.
Like, well, is wage growth good or bad given the underlying level of payroll growth? You know, normally when we're talking about the big payroll growth,
we'll just tune in
that would tend to be on the lower end
Bloomberg
of the wage spectrum. So you could say that
futures, a few pointing up, of course, it will do now.
Employment growth is actually a pretty good sign that underlying wages on it for the individual worker are rising fairly substantially.
Good. And all you got to do with NFP, like any news event, is practice. Practice and know what to look for. Don't be scared by these fake out spikes. I know what they are. We understand. This is money to me. Money to grab.
The price of everything is high. Whether it's fixed income, whether it's equities, or whether it's little
down look
things with a cute little doggy on it. People are pretty indiscriminate. They just buy.
Everything's just in a little bit of a range at the moment, which it will be. We've got about 30 minutes to go till the
This is a joy. Ira Jersey stopped me in my tracks on Fed Day, and we're thrilled we can extend the conversation this morning. To say he's chief U.S. rate strategist at Bloomberg Intelligence barely describes him and his staff, the acuity of their notes. Ira, we are going to a 2% 10-year yield. That is your call for, I don't know, next year, sometime next year as well. What damage will that do to the American financial system to see yield up, price down?
I think not very much. It actually will probably signal a reasonably healthy economy. So, my worry is this stagflation kind of idea that Lisa's been talking about. And when you look at some of the market moves since the Fed meeting on Wednesday, you have the front end of the yield curve continuing to rise a little bit, and with people thinking the Fed is going to start hiking and they're going to, we have to find a terminal rate at this point. Like, is the Fed going to hike all the way to 2%? Or are they going to fall short of that, which is what I expect. But the back end of the yield curve really hasn't moved very much at all. So you still have 30-year bond yields below 2%, which is, not something that I would have thought with the idea that you're going to have, significant inflation over the intermediate term. At least that's what the market's starting to kind of divine here.
Ira, to be very clear, I am not arguing for stagflation. It's just an issue that people were looking at when they talked about the idea that perhaps prices of the things that everybody buys are rising at a faster pace than many people's wages. That's the only thing I was referring
Lisa,
to.
Quite frankly, they're not wrong. Like if you look at real spending and you look at just what's going on in the market and what the market's pricing, the market is pricing for some modest stagflation. Basically, real growth
We'll
being
push
zero,
down. Look on
and
gold.
inflation being
That
something,
one's at
akin to
1790
for
marker
a
now.
particularly long period of time. And
That's
I heard
looking
you
quite
before
good.
talking to Jeff Rosen about who mentioned real yields, and you look at TIPS yields at
Good how you see
-100
the
basis
NFP
points
result
for,
and then price comes
for
back,
10-year
retests
yields,
it later
and
on
that's not
after a
signaling
liquidity
very
grab by the
healthy
market
growth
makers.
environment. So we are
This up and down is all for people with
case
pending
scenario
orders,
potentially over the next 3 to 5 years.
Although the market is not necessarily the reality of the economy. I mean, we keep saying this in different ways throughout the day.
RSI just needs to break our average line here. Look at 39.
Yesterday on the Bank of England's surprise decision not
Nice.
to hike
Get back.
rates.
Get
How
another
much are we
selling
looking at
zone here. This is I'm looking
United States
getting on.
dynamism versus a global bond market?
Wait for it to mess around. This is the area I want to take profit in. 1788 area.
But that's been true.
And then same with US 30. Look, it's got a little spike. Could have had a cheeky little buy already, but I'm just
particularly the sovereign bond markets, right? So
got 4 minutes, that little zone, 30 minutes before the open, where there's always a little bit of manipulation in the market.
The surprise Bank of England announcement yesterday, which wasn't a surprise.
RSI is 81, so still high, which is good. If the RSI dipped out of our zone and back in, that's my re-entry point for a buy. Like, yeah, it came out, back green, bang, we're in.
They're going to react.
Gold is just spiking. Yeah, just you're going to get this now for the next 30 minutes probably. That's fine. You were in a trade here, say you was in a trade, you wouldn't panic because these are the zones where you want to be looking for a complete move in direction. This is just a bit of manipulation around underneath our trend line, so going to buy, it's going to sell, going to buy, going to sell.
Dumbfounded by the lack of big visible corporate issuance. If I'm a CFO and I'm looking at this data,
Still looking good. Look, little dip. Now we've got the blue zone come back again. So that's what I'm saying. When I see these zones, and if I was in a buy, where I would end the trade when I see that, no, this zone is probably going to hold as kind of resistance.
We had record corporate issuance for several years in a row.
Let's do it again.
So the question is, you look at cash balances at a lot of corporations, and they have so much cash. Like, what are they going to do?
That was good. I'm just
do I gear myself up to have more cash? If
pleased with how that NFP kind of initial news went. That was really, really.
That's going on. I would imagine that a lot of businesses that might do mergers and acquisitions and different types of buyouts might find a lot of the valuations unattractive at this point. So, and if you have so much cash, maybe you just sit on that cash. You wait until you see, a market downturn, or you see a couple of, chinks in a couple of industries, and then maybe you go in and you start your M&A activity, and that's maybe when you issue a little bit more debt. But I think at this point, a lot of businesses are saying, hey, we have enough debt on our books. We have so much cash. We don't need any more. Let's
we would need more
sit
cash
on hold at least for a little while and see how the economy develops.
Ira Jersey, thank you so much. Just wonderful to have you with us today. Lisa, just extraordinary to see 2 months, 60 days in this nation, and 800,000 some statistic with a revision. And, to the people that nailed this call with the 649 with revision added in, really, this is impressive.
Momentum. That's, I think, the word that really comes through today to me. There seems to be momentum behind the labor market. How much it has, though, during a historically busy time anyway, to be hiring, which is now, and given the fact that there's so many stores that are looking for holiday time temporary.
Yeah, so we did. We actually just got over $1,000, so that was pretty good.
2022, which is
pretty good. And now look, you see here, look at the Morning Star, DOGE's. Ooh, price action just telling us running out a bit of steam now. Going to get a push on up again, probably on the open, but we want this RSI to come out of that zone. That's the ideal situation.
This is an original labor economy. Do we go back to
And
normal?
UK 100 follow it, and DAX as well if it's trading that kind of those setups as well.
Incredibly human. All the people who went
Let's
home for more than a year, do they decide
hang on
to
and
go
see
back
on
to
this.
the same roles? Do they take on something different? Do they stay with kids who've been scarred from the whole experience of not socializing for more than a year? There's so many human questions behind these headline numbers.
Yeah, I strongly agree with that. And today's numbers, the good news of today's numbers,
absolutely.
Remarkable. We're going to drive this
Yeah,
conversation forward on television.
Good for the jobs market. Good for true scalpers like us. Never be scared of trading news, no matter what. You just need the education. You need to learn how to trade news events, fundamentals, high impact. You know, the thing that most traders, retail traders, will avoid, or gurus or everything. But they're not gurus if you don't encompass all kinds of trading. Okay, I don't do swing trading, but I could if I wanted to. You know what I mean? I know how to do it. I can teach people if they want to do longer term trading, but this is my style. And I get the excitement. You've got to enjoy what you're doing. If this is the job, this is your job. And so, you know, any job, if it's boring, you end up making mistakes, leaving or whatever. Now, if you get bored with trading Forex, get out of it, because you're going to end up losing money and blowing your account. So you you know, that's what keeps me interested in it, as well as teaching people.
At a healing labour market.
The October numbers.
Today's jobs report.
There still are factors that are going to muddy it.
There's huge uncertainty on the labour market.
Supply is a big hurdle.
The market is so tight.
The market's actually looking for another downward drop.
The question we're
What you mean is you haven't got a clue.
Is how many people are coming back to the jobs market?
But it won't be just what happens in this 1 month.
You never want to take one jobs report in isolation.
It will be what happens over the course of the next 6 months in particular.
We know that the Fed has a mandate.
The dual mandate between labor market gains and inflation.
Watch this, look. There we go.
Dual interests are what make the jobs report so interesting.
See what's airing to happen. You hope, you know, you get in on some cheeky sells into this 36249, but we want to see the RSI break our 65.3, and then we'll just trade a nice little pullback before we continue on up on the open. That's my, you know, we'll probably go, we'll get manipulation and drop down on the open. That's fine, and then we'll go back in. You know, we'll just buy on the bottom and let it continue on up. And same with gold. Look, gold's just ranging now, just trying to find its area. Again, you're probably going to get a spike to the upside, but again, I want it to be touching this 1788 zone. That's what I'm thinking. Everyone will be thinking the same, so obviously you're going to get some washout to the top side, this 79.6. Look, actually probably about 79.5. You know, stays below our trend line. That's the most important thing at the moment. And you can see RSI's in and out, in and out, in and out, so no true direction.
You know, I think the one thing Mohammed said is dead right.
Just pleased we got it. You know, we got it right. The news result came out. Bang, in on gold, in on US 30.
I always focus on this leisure and hospitality number because those tend to be lower paying jobs. The number was pretty good there, 164,000 jobs, I believe. But I think that number could be a lot higher. You know, if you look at education teachers, I chair the board of 14 charter schools in Newark, New Jersey.
On US 30, we'll just watch this play out.
It's impossible to hire a teacher these days.
And UK 100 seems to be following suit. Just keep an eye on the FTSE as well, because obviously that was very volatile with the Bank of England interest rates. There you go, look, kind of beautiful, formed a nice pattern.
Demand is not uncertain. It's just how fast can you bring people.
Going to get down to this neutral support. If it breaks here, I might be tempted to go for a sell. Down to our next level here, look.
On any given payrolls report, any given Friday right now, we came out hot at 531. Why are we still struggling to get a read on that, Rick?
Keep an eye on the FTSE as well.
Dependent on how many people are coming back in And can
Gold, like I say, look at that. See, hitting that level. Will we get the drop? That's fine because we're just going to enter sales at the top here. Here's our breakout zone. The top, one at the bottom. So you can just put a level here. Look now. TP1 and TP2. Good, this is what I want to see. I want to see it go the reverse before we get to the open. Say, it's always like 5 minutes, half an hour before the market opens, you get these reversals. Really quick, weird. Yeah, look, you had a little sell-off on US 30, and you've had a buy on gold opposite to the news event, and just literally 4 or 5 minutes, that half an hour, but 30 minutes before the open. So I love watching things like that, analysing, saying, wonder what goes off there, you know.
Or does it take as well, and I want to stress as well, because it will take higher wages, does it take as well progress on childcare, progress on other things that are keeping people at home? But the key issue is we need that labour force participation number to go up.
Wages. Let's talk about wages and the broader story and bring in Michael McKee. Morning, Mike.
Good morning, John. Well, wages did go up during the month of October and pushed the year-over-year number. We went up 0.4. We push it to 4.9%. So if inflation's running just over 5, workers are catching up. It is a short-term number, so it's not going to make a huge amount of difference. But certainly, with the problem we have with the number of people who are participating in the labor force, maybe this will draw more people in because the news was so good. We got, as we've mentioned, 531,000 in October, but September was revised up to 312,000. So the numbers have been better than people thought. You look at the unemployment rate, 4.6%. Well, there are only 104,000 more people that came into the labor market. 359,000 got jobs. So we are, at this point, going down for the right reasons. This is what the Fed wants to see, even though the minority unemployment number's not as good. We've talked a little bit, you guys were talking a little bit about the numbers in terms of big changes, 496,000 in services, and eating and drinking alone, 119,000. Healthcare, that's always one of the bigger ones, and it was weak the last couple months, now up to almost 47,000. The one joker in the deck, 64,500 education jobs at the state and local level. And the Bureau of Labor Statistics says that this is a mystery. They say recent employment changes in public and private education are challenging to interpret as pandemic-related staffing fluctuations have distorted the normal seasonal hiring and layoff patterns. So they're not really sure what's going on. You can take a look there. You can see the problem with the fact that we are not back in terms of either employment to population or the participation rate. So there's still a ways to go, but we're definitely going in the right direction here.
Mike, thank you. Chairman Powell wants to wait. Mohammed, I want your view on that. Not what just you think the Fed should do, what you think they will do. Can you walk us through the two things?
Yeah, I think the Fed will wait. They will argue that they need more data, and they will continue waiting. You know what I think they should do.
Price action, look, running that steam, say US 30, just checking. Listening to Bloomberg while we keep streaming. Post that. So it falls to 4.6 as we know, the employment rate's pretty good.
That are resulting are spreading. So I think that they should have
yes, you're right. Right on gold. One of the guys just the group thinking gold, just looking to trap buyers and go lower. 100% agree. I think the same with US 30. US 30 is going to dip a little bit before going back up again, and gold's going to drop. 100%. I'm on that.
Pulling back more aggressively on QE.
You're right here. Look, we just trap out and then bang. What? This is what I'm thinking.
Is likely to happen in the middle of next year, if not earlier. And I say this because the argument is always, as you put it, what about the other one, John? Why are we still running emergency monetary policy that continues to boost asset prices, that continues to price Americans out of the labor market?
So I'm just keeping an eye on the UK 100 as well. Drop, push up, I think. US 30 is going to be the same. Here you go. Look, US 30 just dipping down.
Listen, I agree with Mohammed.
Gets to here, might nip in. Here's a flat baseline look, which I love to see. So areas of TP would be here. If this does come down before the open, and then we'll see.
In terms of doing it, my sense is they're going to start raising rates.
See that
probably around September of next year. I think the market got a little bit ahead of itself.
My thought.
In three hikes in 22 earlier this week.
Be wrong, and whichever way, I will go with the way. It's a good thing about scalping on this time frame. You know what I mean. But RSI, look at that, it's about to cross our average line.
Is you're creating overheating prices. The risk
Let's have a quick look where we are.
Excess.
Let's just keep on this. Watch this. The one while gold is manipulating people, US30 is playing out the way. We're on 36258.
Capital, Rick. We'll catch up with PGM's Mike Collins later in the hour. This is what he's got to say about things at the moment. Overall, markets seem to have drawn a pro-growth conclusion from the press conference with Chairman Powell, perhaps to some degree stemming from the chair's comments that rate hikes would only be considered after full employment had been achieved. It's an interesting moment right now, Rick, for this market. The data's tremendous. I look at the ISM earlier in the week on the services side, payrolls this morning, and a chairman who remains patient. Even if you're worried about pockets of froth, maybe something worse, how difficult is it to pull away from this market, Rick?
So, John, you bring up a point that is incredible. So, always people ask, what's right, the rates market or the equity market? They are both right in that they're pricing, and there's so much liquidity in the system. The liquidity is immense. The pension fund demand for long end interest rates is immense. The front end to the belly demand from banks in the yield curve is tremendous. Listen, I think the growth is durable. I think
the momentum downside now.
Retailer numbers, consumer is durable in terms of the strength of demand.
Gold the same.
Promotes the equity market higher.
Gold is, yeah, look at that, just spiking a little bit here. Going to see this push down.
And by the way, there's a natural demand.
It's going to be interesting. This is going to be a good open. This is. Sometimes the opens could be flat after NFP, but price action is looking good. Reading these trap.
In this paradigm, because this organic demand, the liquidity, the demographic, the pension fund systems that's now fully funded.
Right, just going to go and top my coffee up while we wait. Back in 1 second.
I think where you see the money flow like you see in flows every week is monies will keep coming to equities.
I want to pick up on that final point. I heard from JP Morgan's Bob Michael earlier in the week. Take a listen to what he had to say on the Fed pulling back and what it would mean for this bond market.
When you look at the negative real yields across the curve, they're too dramatic. Whether you want to use the word normalization or just restoring the bond market to bond market participants, either of those are fine with me. I think yields in the long end are going a heck of a lot higher over the next couple of years.
A heck of a lot higher over the next couple of years. Now, Rick, you've doubted the limits of that. You're talking about the limits of that move. Mohammed, can I have your view on that too?
I look at Rick and I say, Rick, I'm really glad that it's you who's navigating through this fixed income market and not me. I think navigating through the equity market is a lot easier. We've seen the amount of technical moves in the fixed income market. With all this liquidity sloshing around, it is very, very difficult to take a fundamentally based view and apply it consistently. And those who have tried have gotten hurt.
Mohammed, we were all hoping for a big return. Your presence back in the bond market. Are you saying you don't fancy this right now?
No, I leave it to Rick and to my friends at PIMCO.
Mohammed Al-Arian, Rick Reader, sticking with us, I'm pleased to say. Coming up on the program, Democrats feeling confident about the fate of its economic agenda.
Democrats are closer than we've ever been to finalizing and passing legislation to achieve President Biden's Build Back Better agenda.
I'm told it's another
stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
From New York City.
Here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
We're going to pass both bills, but in order to do so, we have to have votes for both bills, and that's where we are.
The House preparing a vote on the president's agenda despite remaining intra-party divisions. Senator Manchin signalling his opposition to bringing paid parental leave back into the bill.
I don't think it belongs in the bill. They're just pushing him left. People are pushing him further left, and that's not Joe Biden.
For more, let's bring in Bloomberg's Anne-Marie Hordern. Morning, Anne-Marie.
Good morning, John. Yesterday, we had the president making calls to House lawmakers to saying when these bills show up on the floor, please vote yes. And potentially, that is what we could see done today. But we should note these are two separate bills. So first off, if the House votes yes on the hard infrastructure bill, that's going to be a huge, very welcomed win for this president who has been sinking in the poll numbers. And that would go directly to his desk. The second bill, and the one that you're talking about correctly so, has a little bit more of infighting within the party, is, of course, the social spending plan, about $1.75 trillion worth. Speaker Pelosi had added in those 4 weeks of paid family leave. But even if the House votes on it, Senator Joe Manchin and other senators are saying that there are provisions in there that they do not agree with, whether it's SALT, whether it's paid family leave. We just don't know yet. And Senator Manchin also saying the fact that the House is working on their bill, that's fine, but we're going to work on ours. So potentially hard infrastructure gets a win today, but even if the House advances the massive social spending and tax bill, that will go to the Senate for markups and then back to the House. You can see how with senators...
Right, scalpers, that's it. I'm back. Coffee's topped up. We've got 30 minutes left on the stream. We're going to trade the open based on the NFP. Wait for that first 15 minutes after the open. And that's it. Job done. That's the end of our trading week for this week. All the main news events traded successfully. And we'll be setting up for next week. Over the weekend. So, but at the moment, yeah, we'll just let's have a look. Gold is pushing on up. It's fine because we're going to be looking to push down on the open. It's that breakout. A nice kind of fake out W, quite nice. And US 30 kind of hanging, doing the same what we wanted to do. So everything's positioned perfectly. The higher gold is, the better. And like I say, it would be nice if it gets back to 1788. Scroll out and see the bigger picture. Look, you see, just kind of followed a bit of nice general price action and a nice big run up last day or so. Really ranged for most of the kind of Asian session. On if the NFP's kicked in, pushing back up, and you can just see price action is just the structure. By zooming out, it's time for this. Well, this trend line, bang, break it and come down.
going to be so much
hitting a level here. Look, our breakout zone 1784. Then it might push back up again. Well, you know, if it breaks that level, it could bring it back down to these levels here. Look at that. This is what you got to do. Have a look at the bigger picture. I don't need to go to a bigger time frame to see. I can see structure. I will need to see here levels of where it's tested. 1, 2, 3, 4, 5, 6. Look at this level here. Look, it's all pretty much the same level, and that's where we get our breakout indicator telling you that when these levels are broken, it's a significant move to the upside. So once that breakout zone goes, then we're off back 1800 and above. But until then, we're going to retest, drop, retest, drop, retest, kind of a drop, retest, drop. So
the size over time. I mean, you've got fiscal spend coming.
At the moment,
the fiscal initiatives we're talking about are going to be paid for.
It is where we are.
There's going to be tax increases to pay for it, and B, they're stretched out
live. This is the zone.
About 10 years.
You know, it's got to break
massive fiscal
significantly here.
Near-term funded. So yeah, I think the Treasury's not going to have nearly the burden that it was anticipated to have because the economy is so strong. And listen, I mean, I think people underestimate.
Keep on gold on this. Mark this as US Open now, as we're nearing the time. 10 minutes to go.
Over time, you know, because of the regulatory dynamic there, and because
on the
of
levels I'm thinking.
Treasury's gilts. But you think about what's happening now in the U.S. You've got a pension system that's now fully funded, or relatively fully funded.
Zones of look. So just keep that neutral support one.
So yeah, I think the supply demand is not that daunting when people say, "Gosh, we're going to get more fiscal spending and issuance." You know, if there ever was a point in time that you could issue more, it's now because of the liquidity, B, this incredible dynamic that's happening, demographics, funding, etc.
Rick, you mentioned the UK. Let's go there, and I'll give you time to think about what you're going to say to stay out of trouble if you wish. On Wednesday, the two-year yield moved a basis point or two higher after the Fed. On Thursday, the two-year yield in America moved 4 basis points lower, largely off the back of what happened in the UK.
See a sell-off
So
action back.
By the Bank of England. The front end of the curve and the volatility.
Here's your support level.
A local story, but a global story. What do you make of that, Rick?
Just because I plan this doesn't mean I do with it. I watch price action. If it goes against me, I'll go that way. That's a good thing about getting in live on a 3-minute time frame, or say a smaller time frame than a bigger time frame. Can't do that because you've got to stick with your plan, really, because you know, how long you got to wait for a candlestick to actually perform, use some kind of direction, you've got it right or got it wrong. At least on a smaller time frame, you can see pretty much in a few minutes whether you've got it right or not.
There was a technical unwind. There was huge leverage unwind that has had to take place on the backside of it. But the dynamic
stick
of
on
central banks
30 here.
are going to move quickly and get in front of this. Gosh,
Might just push straight up before coming back down, before going up again. I don't know. It doesn't matter to me. I know what I'm doing on open, and I want to see a 50 to 100 point gap so I can get in there. Like I say, look, 166. That is fine. 6 minutes to go before we have some trades.
The philosophy a bit in what appeared to be out there. Bank of England,
have a quick drink.
To have to move faster as other developed market central banks are moving faster.
Interesting. Just on this issue, when you have a 20 basis point move at the front end, something's gone wrong with communication on decision day if that happens. Mohammed, I want to give you the final word on it all. The final word, please.
No, something's wrong with interpretation.
Back in the chair.
I know you have strong feelings on this. The economists weren't looking for a rate hike. The market wanted a rate hike and then leveraged it, as Rick said. So I think it was a bit unfair to attack the Bank of England as they've been attacked so far. I think the market went too far in interpreting what they heard. What Governor Bailey said and repeated yesterday is expect a rate hike in the next few months, but he didn't say next month at the next meeting. That's what the market
next year.
Mohammed, you're such a policymaker at heart. You know that if rates are starting to price this in and the chief economist comes out, sees the market pricing and says November's live, they must know how the market's going to respond to that.
November is live in the sense that it is a possibility that we're going to do it. It doesn't mean we will do it. The market ran with that. Right. I think it's the Economist didn't, John. That's interesting. Bloomberg ran a story saying,
I agree, it was split. It was split.
The Economist got it right. The market got it wrong. So not everybody interpreted that language as you suggest.
Don't shoot the messenger seems to be the argument. Mohammed, it's good to catch up. As always, it's good to see you. Alongside Rick Reader. Rick, thank you, sir. Coming up on the programme, the morning calls and later, 6 consecutive record closes, 9 straight days of gains. The NASDAQ is absolutely flying. That conversation just around the corner with Anastasia Amoroso. And
that's why I'm steering clear of NAS now. As it's flying and then can fly the opposite way. So we've got about 4 minutes to go. Nice re-entry look here on US 30 for the buy. So we're going to hit this heavy resistance zone, all being well, before a rejection, then a push back up ends. Weary of that, that's what's going to happen in my opinion. I'm going to see a little bit of rejection before, like I said, it's 150 to 100. Still, it's there. We get a mess around and drop.
Hong Kong
USA.
lost its top spot as Asia's busiest airport in 2020.
Week down look now, that's great. And gold, same.
Lack of a domestic market and strict COVID rules
ranging now, as we said around here before, going to take drop. And just want 100 points from this. Add our money from the NFP, we're not going to be greedy. Look at that, 1, 2, 3 down to that next level of support. Perfect.
Do remain open to travelers, one operated by the Plaza.
Put it up, switched on, yeah.
Down to the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Spike up on gold, beautiful, beautiful. As you'd expect. All the new trades pre-market is always against, i.e. gold goes with the news. The news was good, so look at it. So, but after the initial drop, you want to put a buy in initially. I mean, some people's account might have been okay with this, but you know, then you get the win. But in hindsight, you just don't know. You're just going to continue straight down even more. So, you know, NFP definitely shifts. Peloton downgraded. Yes, throw them in the bin. No.
Upgrading Shake Shack to a buy, expecting sales to accelerate amid increasing tourism. And your final call from Morgan Stanley, downgrading Citrix to underweight, seeing an extended period of uncertainty following its quarterly results. Up next on the program, your equity market staring down the barrel of another record high after a solid jobs report. This is Bloomberg.
Go record high, which means nice sell. There you go, look, there's the push up on gold look. The higher it goes, the bigger the fall. This is what we want. Adjust your TP levels. Fine, to the next points of interest. Great. We performed a second leg W. DAX is up to 29 points, CAC 1%, FTSE 0.5. So they're all bullish at the moment. Should get another probably boost on the open. Going to get the stop loss hunting, like I say, and that's what I'm afraid. Dow's flat, SP is at 0.5, NAS, like I say, is nearly 1% up. Got a couple of minutes. The open. Okay, let's look. Get. The
past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed.
So you just want to look for 50 to 100 points. You don't want to be greedy on this. That's enough. Get you 2 trades, $100.
To users.
30 seconds or so. These out. Oh, gold's perfect. Look at gold. The $200 gold. I've got that spike down. Done. Might go in again. Actually, got $200 there. I entered like 1 minute before.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Again, let's let these play out. 30 gold. US Open, guys. Good luck. There you go. There's the boost up. It's going to close our trade out on US 30 now.
Up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
Cup 26.
Oh, beautiful. Yeah, US 30 just closed out on me and in profit. Gold. Have a look. Gold. Hold it. Oh no, I'm not, because I'm already 200. Wow, $400. Man, this is amazing. Who tells you scalping is hard? Know what they're doing. And we've just got in there. And you can see my results. I got out 2 trades on gold 30 seconds before the open because I'd already hit. I already got $200 in the bank. Got the 2 buys on US 30 and 2 more sells on gold, just as I predicted. Done. Open, all done. As I predicted, which is not always true. On this occasion, it is.
Advancing a 0.5%. That's your opening bow. Switch on the board and get to the bond market. In the bond market on 10s, yields in 4 basis points.
There you go. So that is, you know, done. There's US Open, as I said. There it is. Look, there's the push up. Went to our next zone.
Back through $80.05, up by 1.56%. In this market, we've got to talk about more all-time.
Why wouldn't you trade that? You know it's going to have a pushback, push up, with the result of the NFP.
Industrials up 1 percentage point. Energy up about 1.02%. Bottom of the pile.
Gold, look at that. Now what? This is going to sell again. I tell you, I'm so tempted to get in again. Look, just that wick down. It's hard to see because it's Hakanashi. But there was actually a wick down there. That's why I got so much on the sell.
Do you like what you see?
I do like what I see, but at the same time, some of the moves that we've seen in the markets have been parabolic. And for example, in the very beginning of Q4, we've been flagging that Q4 is going to be typically ends up being seasonally strong. 78% of the time it's higher, and on average it's higher by 4.5%. Well, we are already just a
again using the same lot sizes. I don't change my lot sizes, like I say. So
we still have almost 2 months
you know, let's just see this.
So I think it's been a very
what happens on this
rally, but it's happened very
little manipulation.
In the month of October. So near term, John, I have to say that
we'll go another 10 minutes on the stream.
I think we are due for some sort of a breather in some of the sectors that have done exceptionally well, which I still like fundamentally, like semiconductors and energy and real estate, but they've just been
from NFP. Now we've done 1, 2, 3, 4.
Absolutely flying. The stock market over the last 7 days now higher by 3.3%. Mike Collins, I quoted you earlier.
We've done 19 trades, all green, all winners, and we're well over 1,000. We're about 12. We're about $1,400 up in an hour's worth of trading there. And that was from a start of a $5,000 account. Some people asked me what I started with, but it was $5,000 I put in the account today, just for trading the new.
You know, Jonathan, and the jobs number and the chairman's
let's just see.
aren't the half of it. I think this news actually from Pfizer.
Gold. Oh, re-entry on gold for the buy even. Up against that resistance zone though, so tempted. Tempted. I'm just going to wait for the pullback. Decisions, because you can go in on either really, but I'm still wait.
Right, and now they're starting to come down, and you see this drop in long-term interest.
RSI 75 just dipped back down again. Here we go. We're in profit. I'm just back in again. Big rejection off that.
Continuing to heal, and the
waiting to see.
COVID thing really reaching an end, I think, is a super positive for the markets, and risk assets are on fire today, including the credit markets.
Well, let's talk about that Pfizer up by
resistance zone.
Trading. Our reporter Robert Langreth talking about this, reporting on it for us. Pfizer saying that its COVID-19 pill reduced hospitalizations and deaths in high-risk patients by 89%.
Size 73. If RSI goes 71.
Directly on the name. But on the broader story, there was a hope this time last year we could reopen and get back to whatever normal is. Do you share that hope for next year?
I think we all share that hope for next year, but it does seem like it is a lot more realistic for next year. So not only do we have vaccines for the adult population, we have the vaccines.
I'll do is, guys, that was 97 and 83, so that was another 250 on that, so that's more than enough I've taken out of the market today. I know when to end.
The reopening trade, as you know, a lot of progress has been made on the recovery in domestic travel, for example, but there's
Sold at the top.
ways to go when it comes to international travel.
It's because I know we're going to get some kind of rejection. Look, and yeah, I could hold, but why? Why hold when I got the money I want and I'm out? Or the pips I want? You know, it doesn't matter to me. This comes all the way back down. There's always another trade. There's always another day. There's always another 3-minute time frame. You know, people say, oh, why did you get out early? But look, I've just got 250 in about 30 seconds. Why would I need to mess around? You know, enjoy doing the way I do it. This is how I try and teach it. Greed is what kills you. Holding is what kills you in this game. Especially when you're trading around a volatile period, which is this first 10-15 minutes of the market open. You know, we're going to get a push back, a sell again, a push up. You know, you just don't know. I still believe this is going to come. We're going to hit here. Set that and leave that running on my chart so I can see for later on. As I still think gold, the potential to come back down here, retest.
Happening here, right? As we shift, Jonathan, from this demand for goods, which has been going on for a year and a half now, back to services finally. Right? This is something we've been expecting for a long time, and we've been wrong, frankly, but it's happening now. And again, with this positive news on COVID, I think it's going to accelerate over the next 6 or 12 months. I'm taking my first real business trip to a conference in a week from now, right? Flying across the country. So it is happening, to Anastasia's point. But the dispersion among companies as we go through this big transition.
Today's been really good. We're talking best part of 30 trades, scalps, you know, right from the Asian session. So I always do two. I did two on the Nikkei, 2 on the China 50, Hong Kong, gold, US 30. Then we had 4 trades on gold. We had 4 trades on US 30, another 4 on US 30, another 2 on US 30, sorry, another 4 on gold.
Anastasia, does that resonate with you?
That is the day done. That's the scalping done. We started midday UK time. So we've been 90 minutes and we've done a week's wages for most people. It can be done. I'm not saying you're going to do this straight away. You need to have the funds in your account, but more importantly than that, you need to have the practice and the education and also the help of a trading system like what we've got here. Like I say, I don't solely rely on any one particular thing. I don't rely just purely on TA. I don't rely on fundamentals. It's the combination of all that with experience of knowing of how the markets will go against you before coming your way, where your risk is going to be, where you should get out of a trade, where you should hold it. And that's practice. That really is practice. Having someone like me as your mentor, joining the group with the team, we talk to each other about stuff like this, and then practicing until you get the knack for it. And if you don't get the knack, trading's not for you. That's as simple as.
And maybe I would shy away a little bit from real estate, but if
RSI now 65.
Some sort of a catalyst, those are the 3 top sectors.
It breaks here, breaks back into the zone look, then we are coming down 79.4. We've just peaked at 18 again. Gold's favourite number at the moment is $1,800 an ounce. Has been for the last month or so, 2 months.
10 days in a row, the best winning streak, longest winning streak of the year, gaining 7% over that time period, matching a streak last December. And similar to last December, this isn't about the pandemic stay-at-home safety trade of tech, but tech for tech growth. Take a look at that, up 7.1%. And not surprisingly, it has everything to do with yields coming in. Over the last 2 weeks, we have seen a dramatic drop in yields from the 5-year, 7-year, 10-year, 30-year. Look at that 30-year coming in 16 basis points. rates. When yields go up, valuation comes into concern, as you know. But put another way, when yields come in, the present value off of discount rates, assets go up. So that really makes tech look more
excuse me.
Not surprisingly, we now have the
We're just going to go another 3 or 4 minutes. We'll just watch the end of this play out. Just want to check US Open. There you go, look at that. Perfect. We couldn't have had that go any better. That was easier to work out than really gold. Just predictable. We've been in a big bull run with such good news that even the manipulators can't stop market going the way this time. But usually we get some kind of pullback. I mean, the market opened here, look, and you did get a wick down, look. Just see that? You can just see the wick down here, which was, if you entered the top of that candle, which I did just before 27, there you go, look. Then yeah, look, you could have had 100 pips scalping, winning on the sell, which people would go crazy. But that's you capturing the manipulation, as you making advantage of the market. So I could have gone reverse. I could have gone, look, everyone's expecting the market to buy because of the news, because of what's happened. The bull run's got to come to an end. I'm going to go in for a cheeky scalp. It's knowing how long to get in and out for. Like I say, that 50 to 100 point is the magic zone, and you would have got 100 points there, even with a spread. So you would have won on a sell, going against everyone else. Not crazy, it's you understanding how the markets move. Zooming in, looking at price action, taking notice of wicks. Wicks don't lie, as somebody else's site has got, and it is true. And wicks are where the money are.
What's interesting is if you look at the
So you could have got in on a sell here, look, and cleared that little wick, and then gone for the buy.
you see that S&P still delivers
Many different methods and systems, but for me, you know, we went because NFP. We always trade news on the open when that happens. When it's such a big, you know, a big result compared to the expectation. I mean, you're talking more than 10%. But 15% better than expected. That moves things. So for you guys who are sticking online and watching, then obviously US Open, look, you've got two options here. You either wait for this RSI to come back out the zone and back in to re-enter, like here, here and here, or you just wait for the sell. Just wait for the pullback, wait for the rejection, wait for the dip into the zone here, and then wait for it to break the neutral and then down. That's your next port of call on you know,
our view, John, a negative 1%
is to look for that.
rate is where it's supposed to be. That is actually
It might not be yet. You know, you sit on your hands and wait for the sell.
Supposed to earn a positive return over inflation by sitting in cash and treasury bills, right? They're supposed to pay to store their money. That's the world we live in. So that is a normal relationship, and that is good for valuation, right? It continues to support higher than historical equity valuations and probably tighter than historical credit spreads, right? We've always had the view lower rates actually force people into more credit, into more corporate bonds, high yield bonds, etc., which lowers those relative yields or spreads on the credit sectors. And you're seeing that today, right? You're seeing the rates come down, real rates fall, credit spreads tighten. That's actually feels like a pretty normal relationship in the near term, right? Over the long term, you know, we can talk about credit risks on the horizon.
Well, we can talk about that a bit more, but just a final word, Mike, on what you just said. You are undeserving of a real return on sovereign debt, on the risk-free asset.
Yep, that's it. I mean, I said in the chat there, you can, if you do miss the NFP, then you just wait for the open. And the open, as we saw, was a continuation of what we saw with NFP. Even with gold, that looked, I mean, the thing with Hakanashi, it's an average, so it can look like it went the opposite way. But within that candle, there was that wick down. I won more on gold on that open than I did on the NFP. So it just shows you, you know, trust in the system and the strategy. You know, that's what you've got to do, and then you can always look at the reversals. But you know, US Open will drop eventually, not now. Look, I mean, it's beautiful bull run. You know, some people might get in now once it breaks that 85, but I would just be cautious now. Just wait that first 15 minutes.
Comparing us as OPEC Plus, not as what some of you unfortunately call us as cartel, but as a responsive regulator to a market that needs to be regulated.
This one's getting a little bit more contentious at home for the President of the United States.
There we go. Money back.
Looking good team, looking good. And yeah, I was waiting for, I wanted to get a cheeky sell on UK 100 if it broke this zone here, but it just didn't happen. I mean, you know, you can wait and sometimes it doesn't happen. It's formed a nice W, it's going up, obviously, because, you know, US is going up, UK will go up and follow suit for now, and then it might be later on, so that could be a later trade, but if it doesn't happen, it doesn't happen. You know, I didn't place a trade in there, so it doesn't really matter. Gold, look now, here we go, look, just rejected off that breakout zone. Wait for it to break here, then you can scalp in this zone here. Wait for it to break the flat, you can scalp here. Wait for it to break this trend line, you can scalp here. You've got a nice little pattern as RSI comes down, bringing the price down with it. And then US 30 moment still continuing up, as you'd expect. US 30 up, gold down. But it's got to, you've got this heavy resistance. If US 30 breaks this area here, you've got to get on a buy. You need to be in a buy for heavy, up to the heavy resistance, up to that 36485. This is a good zone to get in. Just wait, because if it doesn't break, if it's a fake out, then just wait for the sell. Come back down to that trend line. So there you go, we've done, I said it'd be about 15 minutes, we've done 50 minutes of the open, we've done NFP, we did a little bit of an ISA beforehand. Thanks to the team for joining me from the Discord group, and obviously keep watching, you know what to look out for, and if people want to follow what we're doing and continue, then obviously join the Discord group along with the team, and you can continue trading as we do. These streams are just a snapshot of what we try and get up to within the group and what I try and trade, just to give you an idea of how you can true scalp, what it's all about. So I'm just going to say trade safe and join us on the next stream. So yeah, so there you go. Thanks everybody, another successful NFP, and hope people learned a little bit from that and how you can true scalp and earn some money from it. So until the next stream, trade safe, take care, and see you again. Take care.